Welcome back to another portfolio update. So I wanted to start off here with the overview of my portfolio. So for you guys who don't know, I track all my investments on Excel, and this is for a number of reasons. Mainly just because I have it on so many different platforms. I use Hargreaves Lansdown, Trading 212, Crash, cryptocurrencies, premium bonds. I use Crowdcube to invest in private companies, stuff like that. So using Excel allows me to track it all in one place. So as you can see here, my current portfolio value is £21,448.89, with a total gain of £3,034, meaning I invested £18,413. So I've deposited that amount, and now my portfolio is worth this amount. And just a quick overview as well. So this is kind of how I track it. So I put the dotted lines here is kind of what I forecasted to have, what I wanted to have, and the solid lines are the actuals. The orange is the actual value of the portfolio, and the blue line is the deposit amount. So I'm well ahead of my target. I used all the data comes from this section here, where I put in how much I deposit each month. Then I've got the numbers of total profit and loss. So you can see I had a few months where it was actually in the red, it went negative. But you can see this month also with the vaccine announced, I've made 10% in 1 month, which equates to £1,879 in one month, which is absolutely incredible when you consider that's more than a month's salary for a lot of people, including myself. I don't earn that much in 1 month. So that was really, really nice to see. So moving on now, so this is the totality showing where my money is and located. So I want to start off with my Trading 212 portfolio. Okay, so jumping straight into Trading 212, you can see here, so it's a view from the last year. It's been quite steadily growing. I put money in quite frequently and quite regularly. However, in the last month particularly, you can see I was sitting around 5%, and then it all dropped. The vaccines, the cases were going worse. Then it started to pick up again. And then on Monday the 9th, the Pfizer biotech vaccine was announced, and that caused pretty much the whole stock market to go up, but mine particularly because I had a load of value stocks that were directly affected by the COVID-19 pandemic, and the vaccine being a solution. It meant my stock portfolio went from a return of £252 all the way up to about £900, and now it's sitting just over £1,000, just under 15% gain. So one of the biggest stocks that have been affected by this has been my shares in IAG. So I made another video about this. I got in at 91 pence. I bought 437 shares. And as soon as the vaccine was announced, so I messaged my friend saying like, what's going on? I saw the stock went up like 60%. I was wondering how it happened. And then I got a notification directly after saying about the vaccine. I thought, oh my God, that makes sense. So I was really happy about that. So you can see my total return on International Airline Group now is £273, just under 70% on one stock, which is incredible. Another really good value stock I got is the Gym Group. You can see here 51%. I think I've invested £160, and it's worth £245, £83 return on one investment. So that's really nice. But I've made videos about them before. This video I want to talk about my largest holding, and this is in BAE Systems. So I invested in BAE for a few reasons. If I first just show you my holdings, it was because I bought it around previously. If I just go into my history here, and you can see what price I actually bought it at originally. So I started off with a £45 investment, and I bought it for 509 pence. And then I averaged down a few times, and then I went in big and I bought it for 515 at 408 pence. So that's a massive drop. It is down about 25%. So I cost averaged, I bought it really low, and that brought my average price down to 420 pence, and now it's 485, meaning I've got a 15% profit, or just over £100. So like I said, I was going to talk about the reasons why I bought this. So number one, I noticed, because I was holding it, I noticed how much the price had dropped. So I found that quite attractive. And then I looked a bit deeper. I looked at the P ratio. So it's currently around 10. When I bought it, I think it's about 9. And at the time, the FTSE 100 was a 16 P ratio. So for those of you who don't know, the P ratio is the price earnings ratio. It's the price you pay for every £1 that company or index earns. So in this example, BAE, you pay £10.85 for every £1 that company earns. And you can use this to compare against companies and indexes to see what the price is like or what people are willing to pay. So looking at a direct competitor, Lockheed Martin, another defense company, their P ratio is 17, meaning people are willing to pay more money for them than they are for BAE. The reason why I invested more into BAE and not Lockheed Martin, one was because the price was so attractive, because it was dropped so much. And also you can see here Lockheed Martin had just under 2.8% dividend yield. When I bought BAE, it was about 5.7. So it's gone down now because the price has gone up to 4.9. But they're still a really strong, healthy dividend payer. They have a lot of cash, they can afford to pay dividends, and they continue to do it. So I just got into the Simply Wall Street analysis here. You can see they indicated a really good value, really strong, healthy, large dividend, and they've got a lot of health to pay off financial health. And this is like the more current, so like I said, I bought it a lot cheaper than what it currently is, but it still looks really good to buy in my opinion. But I won't be buying any more because I put so much money just into it, so I'm allowing that to grow for a bit, and I'll look for some other good deals in the meantime. So the reason why the reason why I think the price went down so drastically was because of the election. I tried looking online on all the forums and that stuff, but I couldn't really find it. But I think it was because of the election uncertainty within the US. So obviously Joe Biden did win, but there was worries if he did win, he would reduce defense spending. However, he said that's not the case. He'll continue to spend on the defense spending. And BAE, their revenue streams, I think it's about 50 or 40% from the US. So that would have been an important factor if the US cut their spending. And also, Boris is quite big on spending more money now into the economy, try to get it going, employ people within the government. And these have a lot of government contracts. So I think they'll be spending that money to keep boosting the economy as well. This is just my kind of uneducated opinion, but that's what I think. And so far it's done quite well, 15% up. Obviously the whole market's gone up. But this is more so than the FTSE, which is a good indicator that is a good stock to buy. So moving back to IAG, International Airline Group, I just wanted to go through and summarise why I bought it again because of the massive impact the vaccine had on it. As I said, it's gone up 60%, but there's a few reasons why this airline group in particular outperforms stuff like Ryanair and EasyJet. So this is quite an interesting topic here, or note this guy mentions. On the Yahoo Finance stock forum, so it's a forum talking about this stock, International Airline Group in particular. He goes on to say about how it's got its fingers in many aviation pies. It has long haul, short haul, and cargo flights. Means that it's diversified. It doesn't rely on one customer base, such as Ryanair and EasyJet. It goes on to say it's flexible enough to expand its short haul intra-Europe play with Vueling and Air Europa, and they can buy them out. You can throw Qatar Airways in the mix, which is 25% plus owner of IAG, and then you're looking at a company with a large footprint across the globe. Their passenger planes are readily convertible into cargo configuration if the logistics side of the business needs expanding. So basically what it's saying is it's doing stuff that other airlines aren't doing, and where barriers to entry in the airline industry is so high, it's not easy for a new competitor to come up and compete with them. It would be companies like Ryanair and EasyJet, but they're not in a position to do that because they don't have, especially at the moment, because they don't have the cash on hand to kind of expand or do this. Whereas British Airways always has, or International Airline Groups already has the infrastructure to do this and is doing it. So that's why they kind of set themselves apart, and that's why I invest in them opposed to another airline group. Moving on again to another stock that's been directly impacted by the COVID-19 pandemic is my shares in Mitchell & Butler. Again, I talked about this. I bought them on Hargreaves Lansdown. If I put a screenshot here, so I've got about £300 worth I deposited, and they've gone up 60%. So I'm up about £180 on them as well, which is absolutely incredible. Again, as always, wish I put more in, but obviously everyone says that. If it fell, I'll be happy I didn't. So that's the risk I took. So why Mitchell & Butler? So again, this is on another stock forum, particularly about Mitchell & Butler. And there's some really interesting points here. But basically they're saying what sets these apart from other companies is when I bought them, they had a P ratio of 4, again indicating a really low price. But they also go on to this, they sum up really well here. So it's in total assets and total liabilities given a net asset value. So it's total assets it owns of tangible assets or things of 4.8 billion, and it owes money or has short-term debts, liabilities, and long-term debts of 2.9 billion. So it has a net asset value of 1.9 billion, but the company total market cap is worth 936, so just under half of what its net asset value is. So that, and normally that means you're buying something that's worth half of its value. And this is because Mitchell & Butler, they own their real estate, they own the land and their pubs and all the other brands, or they own a lot of it, meaning they benefit from property prices going up, and they're also not as they're not as risky because they own it. They don't have to pay rent, they don't have to worry about increasing rents, they have more control. So that's the main reason why I bought that. Another reason why I actually did buy it is because you get a discount booklet every year. I love Miller and Carter, Toby Carver, all that stuff. So every year, they don't do it on Trading 212, but Hargreaves Lansdown. So if you want to invest in them, every year you get a discount booklet, basically. That's kind of why I did buy it, if I'm being honest. But also, the great price made it more attractive to buy. And that's why I put a bit more money into it. So this has been one of my favourite buys, IAG and BAE. And now I want to move on to my crypto portfolio, my Coinbase. So as you can see here, my Coinbase portfolio has shot up recently. I deposited, I think, another 80 quid. Where was it? About the middle of November, about a week ago, 10th of November. And it's just peaked over £800. I've put in about £560 and now it's worth 800, almost a 50% return on my crypto. And I think Bitcoin is going to continue to rise. You can see here that it's almost at its all-time high. It's just like £1,000 off. And I really believe once it breaks that barrier, that 15,599 peak, which it got, quite funnily enough, last December. So it'd be quite funny if it beats it this December in just a year's time. So the reason why I think once it beats that peak again, it's going to be all over the news. People are going to have the fear of missing out again. They're going to start pouring money in. And this time they're also going to have more faith in it. And it's not only that, I think it's been rising for a real reason as well, and that being because it's becoming more usable. So companies such as YX, which I mentioned earlier, I have invested in startup companies on Crowdcube, private companies. YX is one of them. So you have a debit card, you can pay with that in any merchant, and you can convert your crypto into pounds on the spot for free, meaning you can use cryptocurrencies whenever. And that's only going to become more popular and more prominent. More people are going to be doing that. There's more cryptocurrency ETFs. I've done a video on the Bitcoin ETF on Trading 212. Banks are starting to use Bitcoin. They're seeing it as a hedge. They're creating they're seeing it as gold. And I think there's an article saying about Citibank saying it's going to be worth like 400k at the end of 2021. I'll leave you to think if that's going to happen or not. I don't know. Hopefully it goes up, continues to go up. I'm going to make a whole video on my kind of thoughts on the Bitcoin future in a few days. So stay tuned for that. But yeah, so that's kind of a summary of my portfolio. That's kind of some of the big buys I've got, some changes that's happened into it. Let me know how your portfolio is doing. And if you enjoyed the video, please leave a like and a comment and subscribe. And thanks for watching. I'll catch you guys next time.